Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, January 8th, 5:16 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the follow-through days on November 1st and 2nd. Things were a little bit dicey last week, but improved big time today. You can see the trend gauge over here. We've still got the yellow neutral arrows on market leadership and short-term moving averages, but we've got the green sub arrow under there as a lot of improvement on not only leaders that held up, but also some that broke last week and regained their 21-day moving average. And same thing for the indexes. We closed last week with the NASDAQ 100, small cap and mid cap indexes all above their 21. But after a nice rally today, they all reclaimed. Need to get two closes back above there before we go back to bullish. But really, today was everything that the Bulls could have asked for after a challenge to the rally as far as leading stocks go and the indexes go on a short-term trend anyway last week. Medium-term and long-term trends still firmly above their 50 and 200-day moving averages, so green arrows there. So what happened today? Let's call it the trash to treasure rally. Last week, nobody wanted anything to do with tech stocks that led the Q4 rally. They were sold hand over fist. 30, at least 30 on my list, breaking the 21-day moving average, some going down to the 50-day or the 10-week and bouncing. A few held up just fine. Those were all, and this is one of the confounding things about the market. How can a stock go from being unloved one day to everybody wanting it the next day? And there's really no answer to that question. The market will try to pry stock from weak holders all the time. And that's what we saw between last week, the weakness, and this morning. Maybe it has something to do with there's a big tech conference, CES 24, and AI is the main theme there. That starts tomorrow. It could be just front running ahead of presentations at that conference. We don't know for sure. All we know is we don't try to justify price action, but we sure do pay attention to it. Try to poke holes in it if there are holes to be poked, but if there are not, we follow it and go with it, and that's what we ended up doing today. The Big Seven up 2.67% on average. RG8, our 8 growth ETF composite, regained a lot of last week's lost ground, up 2.13%. S&P 500 opened just above flat, and an all-day trend up rally, no sellers anywhere. Well, you'll see when we get to the charts on the 5-minute chart, just a smooth straight line as it was a buyer's day today. Equal weight, a little bit worse, down up 1.1%. NASDAQ 100 up 2.1, equal weight up 1.7. Dow the laggard up 0.58, mid caps up 1.3, Russell 2000 up just shy of 2%. Global 60/40 up 0.81, in-house GROTECTION a solid day up 2%. Let's get to the charts, then we'll get to the tail of the tape, and then we'll get to more charts. We start with the index the way we always do. So here's the S&P 500. You can see last week's pullback, big. We had an undercut and reclaim Thursday and Friday of the 21-day moving average. Strong move off the 21 today, reclaim of the 8. Here's the 5-minute chart on the S&P. You'll see what I'm talking about. This is just a trend up all day from the opening at the low, and just buyers all day long. Nice thing to see. Let's go to the 15-minute chart here, and you can see how we just regained 4 days of losses from the gap down on the opening day of the trading year. We got back above that high, just 6 points away from where we closed the year at 47.70. So great day there. Even better day for the NASDAQ 100 as it reclaimed the 21-day moving average after 3 daily closes below and the 8-day exponential moving average. Good strength there. Dow Jones Industrial Average, best price action. Relative weakness today, but that's okay. We're good with that. It's a defensive index, and today was all about tech. So Dow up, but only up 0.6%, and it was dragged down by Boeing, which had a door blowout on their 737. and Boeing had a rough go of it today. Mid caps last week lost the 21-day moving average after battling around it, three closes below it, reclaimed it today, and that 500 level and the 8-day exponential moving average. And small caps, three closes below the 21 last week, regained the 21 this week, ran into the declining 8. We'll see if we can overcome that tomorrow. We re-entered a leveraged ETF for the Russell today with the reclaim of the 21. So good stuff there. VIX confirmed. The indexes ran into the declining 50-day moving average and sold off all day, closing back below the 21, just what we want to see. How about the dollar? The dollar was weak today, hanging below the 21-day moving average. Look at that big outside reversal in the dollar on Friday. Follow through weakness. Weak dollar, good for stocks. We like seeing that. Despite that, gold and gold stocks suffered today. Gold down 0.8%. Gold stocks just down 0.25%, closing at the high of their range. Let's flip to bond. Oh, no. Bitcoin. The news that there's supposedly going to be a multitude of spot Bitcoin ETFs approved this week. BITO had a good day, up 6.7% as Bitcoin broke out. Something to note here, BITO, which is really the only game in town right now, but won't be when these are approved. And the new ones are going to have a much lower expense ratio. So we'll be getting out of Bitcoin and going into one of those lower expense fee. They're going to be like 0.25, 0.3, whereas BITO is 0.95. But regardless, Bitcoin breaking out today from this range that it's been in for about 5 weeks. So good stuff there. Let's flip to bonds. Inside day on bonds hanging right around the 21-day moving average. That's the broad bond index. Same thing for the long bond index. 21's acting as resistance, and it's hanging around the 200-day moving average. Yield on the long bond down 0.6%. Yield on the 10-year down 1%. Let's go to the tail of the tape here. I mentioned that CES 2024 starts tomorrow. AI, the dominant theme. Day count up 1. Day 1 back above the 8 EMA, day 2 above the 21-day moving average on the S&P 500, day 1 back above the 21-day on the QQQ. Expectations, we can flip this back to positive now. As long as we can maintain the 21 tomorrow and get multiple closes back above it on the NASDAQ 100. As I mentioned, all day trend up. Good to see that. Some strong sectors. Opposite of what was weak last week. Semiconductor strong, software strong, builder strong, high beta strong, tech strong, biotech strong. On the weak side, the dollar, oils, China internet, and gold. A lot of the exposure that we took off last week, we added back today. Don't want to argue with the market. When it's weak, it's weak. When it breaks a level, it breaks a level. When it reclaims that level, don't ignore that it reclaimed the level, because you've got a nice stop, which is right below the level where it failed in the first place. So some leading names that we own and we added to today: CrowdStrike and NVIDIA, and added additional SSO position. We bought FNGU. This is offsetting. This is the Big 10, the FANG 10 index that offsets our QID short. We're going to give it another day. Did this early in the week to offset it, and then, or early in the day, and then one of them's going to win, and then we'll get rid of QID if we stay above the 21-day moving average on the NASDAQ 100, and URTY, that is the Russell 2000 that we got back into, bumping our exposure up from 1.02 to 1.43. Bottom line, trash to treasure rally led by AI tech. NASDAQ 100, small caps, mid caps regain their 21-day moving average. Pretty much all that the bulls could ask for today after last week, they got. Let's go to some individual names now. We'll talk about the names that we added to, and then we'll talk about 10 names that failed last week but reclaimed the 21 today after holding the 10-week last week. So first of all, what would we add to? This was strong right out of the gate today. CrowdStrike, very clear strength and volume. Hung around the 21-day moving average, showing relative strength last week. Big move above there. Good stuff. Our second largest position now. Also added to NVIDIA. This is now our third largest position. big breakout above this flat base. Everybody's eyes are on this. When everybody's eyes are on it and it still works and there's volume up 6.43% on 57% above average volume, uh, sometimes what's obvious in the market does work, regardless of what some people might tell you. But this is a big breakout. It's a must-own institutional leader, and it broke out on big volume. That's the bottom line there. FNGU is the FANG Plus index. FNGU regaining the 21-day moving average today, and URTY, that's the IWM. Won't show that. But what we will show, well, let's show the rest of what we still own in the portfolio. Lilly, all-time high close, I believe, right at the top of this base. And we also own FCX, which had a good day also. Bounced off the 21-day moving average. Those are the 5 individual names that we own. We own Nail. ITB had a great day. This is home builders as rates pulled back a little bit. Again, bouncing off the 21-day moving average. Great low risk entry, regaining that 100 level. And the 8-day exponential moving average, we own Nail to get some leverage on that. We also own BITO. And we added that FNGU today. So let's take a look at 10 names that broke the 21 last week, but reclaimed it today and held the 10-week moving average last week. And these are all familiar names, and you're going to see a familiar pattern, 3-4 days below the 21, reclaim of the 21 and the 8-day exponential moving average. We'll stop with Shopify. VRT, still below the 21. But the issue is the 21-day. I have this sorted by price against the 21-day moving average. This is the 21-day simple moving average in MarketSmith. So while we use the 21, this is as close as we can get, and you do have some discrepancies here. This is not above the 21E, but it is above the simple 21D. However, I'm showing a 21E on there. I hope you followed that. Snow, clear break back above the 21. Datadog, same thing. I'm just not going to repeat it because it is the same thing over and over again. Twilio, these were tech names that were strong out of the gate, and not all tech names. In this case, Airbnb, which bounced at the 50-day, regained it today. The 21, Mercado Libre bounced at the 50-day. Live Nation undercut the 21, regained it today. DoorDash regained it. Deckers, they're pulling back to the 50-day moving average, bounced off there nicely. And Wingstop, basically right on the 21 and the declining 8. Cloudflare right on the declining 21. So these ones that are right on it, you want to look for additional strength over the course of the week. Otherwise, it may take them longer to form a base. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Clients, be on the lookout for an email of the 2023 year-end review video. It's been emailed, and some of the analysis in there was done over the weekend. I talked about the weakening market, especially in tech. That was all undone today. That's how fast the market moves. Sometimes just one day, you don't know why. It's a living, breathing mechanism that nobody can figure out, and nobody can master with 100% certainty unless you have co-located servers and are front-running orders like Citadel at the exchanges. But that's a whole different topic of conversation. So anyway, be on the lookout for that. Don@RevereAsset.com. If you're interested in becoming a client, my partner Dan Stewart, Dan@RevereAsset.com. Of course, it's not how much you make in the market, it's how much of that you can keep. And we were focused a little bit on how much we could keep last week. Hopefully, this change in character today follows through to the upside, and we can get back to focusing on compounding. And with that, I'll wrap up the video for Monday, January 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thank you for listening and have a great day.